It's your boy PB, the grizzle host of PhatBear Alpha, coming at you live on this beautiful Wednesday. Let's start the show with the king of crypto, Bitcoin. It's still ranging around 95K. Seriously, BTC's been stuck in this range for a week, just chilling like a whale waiting for the next pump to dump on us retail. The total market cap is the same at 2.97 T. Yep, unchanged, unmoved, unflinching, like my ex's opinion on altcoins being scams. The 24-hour trading volume's taken a bit of a nap, down 14% to 71.9 billion. Bitcoin dominance is also the same at 63.5%. The fear and greed index at 52, as neutral as my feelings about vanilla versus chocolate. For alt performance, the winners are Alpaca Finance, Pundix, Drip Protocol, and Wayfinder. The losers are Virtuals Protocol, Pewdie Penguins, AI16Z, and MemeFi. Next, we're diving into the wild world of macro with Germany. German retail sales in March dropped by a slight 0.2% month-on-month, when analysts were bracing for a 0.4% faceplant. Year over year, sales are up 2.2% in real terms, which sounds like a win until you realize it's probably just people panic buying sausages before the next tariff hits. The German Stats Office dropped this gem on us, saying nominal sales, the number you got before you adjust for inflation, fell by 0.1%. Food sales got a bit of a boost, probably because who can resist a good pretzel, but non-food retail? Flat as my portfolio after the last altcoin season. This less bad number isn't exactly popping champagne. Germany's economy has been wobbling like a newbie on a leverage trade, with 2 years of contraction and fears of a third. Economists are whispering about stagflation, that lovely combo of stagnant growth and sticky inflation, thanks to rising import prices and Trump's tariff tantrums messing with global trade. Germans are still spending, but they're not exactly going wild at the mall. They're saving more, hoarding cash like it's Bitcoin in 2017, because job worries are creeping up and nobody trusts this economy not to rug pull. Now, time to head over to our crypto news. Camp Network just announced they've raked in a cool $30 million in a Series A round, co-led by 1KX and Blockchain Capital, with a whole squad of other VCs like DAO5, Lattice, and OKX piling in. 30 mil, that's enough to buy a small island or fund another Ethereum Layer 2. This cash is fueling Camp's big plan to build a Layer 1 blockchain that's all about marrying intellectual property, IP, with AI in a way that doesn't screw over creators. Novel concept, right? Camp Network's pitching itself as the on-chain Hollywood, where you can tokenize your IP, like music, art, or even your TikTok dance vids, train AI agents on it, and get paid when those agents go out and make bank. Their proof of provenance protocol is the secret sauce, making sure every piece of IP has a traceable origin, clear usage rights, and automatic royalty payouts. No more AI companies scraping your work without so much as a thank you. James Chi, Camp's co-founder, put it best: provenance isn't just a feature, it's a foundation. Sounds like something I'd tattoo on my arm. Next story. The SEC has officially dropped its investigation into PayPal's Pi USD stablecoin, and get this, without slapping them with any enforcement action. That's right. The Wall Street watchdog started sniffing around in November 2023, hitting PayPal with subpoena for documents like it was auditioning for a crypto crime drama. But in February 2025, the SEC was like, we're good, and closed the case faster than a flash crash. For those living under a rock, Pi USD is PayPal's dollar-pegged stablecoin, launched in August 2023 with Paxos Trust as the issuer. It's backed by boring but safe stuff like short-term treasuries, dollar deposits, and cash equivalents. Sounds solid, right? Well, despite PayPal's big name and 431 million users, Pi USD has been struggling to get traction, sitting at a measly $880 million market cap. Compare that to Tether's $148 billion, or Circle's $62 billion, and it's like watching a small fish swim with whales. Still, it's up 75% from $498 million at the start of 2025, so maybe it's not totally dead in the water. PayPal's dreaming of 20 million merchants using Pi USD by year-end, but good luck convincing vendors to ditch USDT. Last crypto story. BlackRock, the Godzilla of asset management, just filed with the SEC to launch tokenized shares of its $150 billion Treasury Trust Fund, and they're calling these bad boys DLT shares. That's distributed ledger technology, for you normies who think blockchain's just a buzzword. This massive money market fund is getting a blockchain makeover, courtesy of BNY Mellon, who use the tech to mirror ownership records. That's right, Wall Street's getting cozy with the chain, and it's giving major we're not in 2008 anymore vibes. These DLT shares are aimed at institutional big dogs, with minimum buy-in of $3 million. No retail degens YOLO their income checks here. The fund itself isn't holding crypto, but BNY Mellon's blockchain setup will track who owns what, making it all transparent and shiny for suits. BlackRock CEO Larry Fink has been hyping tokenization like it's the second coming of ETFs, saying it'll revolutionize investing. And you know when Larry speaks, the market listens. For our DeFi news, the first story is about Infinex's newest feature. Infinex announced a new thing called Infinex Connect, and it's being hyped as the ultimate crypto command center. Infinex Connect is a new dApp experience where you link Infinex to any supported DeFi app or protocol, dragging your entire portfolio along for the ride. Think of it like a universal remote for your crypto life. You onboard the new ecosystems with Swidge seamless swap and bridge magic, then track every move back in your Infinex dashboard. The Connect SDK lets developers plug their dApps into Infinex's ecosystem, so users can manage everything from one place without juggling tabs like a caffeinated day trader. Infinex Connect sounds like a DeFi wet dream. Unified dashboard, seamless dApp integration, no more wallet hopping. But I've been burned by enough revolutionary platforms to know the devil's in the execution. DeFi UX is a mess, sure, but can Infinex really deliver a sex killer that doesn't choke on gas fees or glitch out during a network spike? And while the Connect SDK is dope for devs, how many protocols are actually going to jump on board? And 12 plus blockchains is cute, but if they don't include the hot new L2 or meme coin chains, users might still need a backup wallet. Next story. mETH protocol just dropped a banger. They've officially integrated HyperEVM into their mETH protocol bridge, letting users shuttlecook and see mETH from Ethereum or Mantle Network straight, the HyperEVM's DeFi playground. For the uninitiated, mETH protocol is Mantle's liquid staking and res taking heavyweight, turning your ETH into mETH for max yield, while letting you flex it as collateral across CeFi and DeFi. Cook, meanwhile, is their governance token, spicing up their metamorphosis campaigns. This move got degens hyped about tapping into native yield opportunities like the HyperETH vault on Mizu. That's right. It's like Mantle just built a teleporter to Hyperliquid's high-octane DeFi ecosystem. Once you're on HyperEVM, you can dump your mETH into the HyperETH vault, a collab between Mizu Labs and Hyperbeat, to farm rewards from protocols like HyperLendX, HarmonixFi, and HyperSwapX. HyperEVM's got 38% of its $22 billion Hype token distribution, fueling ecosystem incentives, so the vault's basically a slot machine for yield chasers. Last DeFi story. OpenLedger, that data blockchain for AI backed by Polychain Capital and Borderless Capital, just launched a one-week event called Mint Your Model Madness on their testnet, and it's like American Idol for decentralized AI. The pitch? Head to OpenLedger testnet, propose a unique AI model idea, and chill on X with a hashtag Mint Your Model Madness, and remember to tag OpenLedger HQ. They're calling it a first-of-its-kind challenge to shape the future of AI, with massive reward for winners. Sounds like a party, right? Here's the deal. You dream up a specialized AI model, maybe one that vibe checks scam tokens or narrates your gaming stream, and post about it on X. Eligible posts include screenshot of your model page, catchy names, funny captions, or full-on threads about why your model's the next big thing. You can even drop screen recordings or videos hyping its potential applications. People are throwing in tons of models already, with OpenLedger reporting 9,999 submissions, and counting one post gush about a model that detects forest fires. Peak creativity or peak hopium, you decide. For our airdrop guide, let's talk about the new Perena pool on Exponent. Perena is all about making stablecoins less of a DeFi headache with their numeraire AMM and hub and spoke model, where their USD Star stablecoin is a core liquidity token linking stablecoins like USDT, USDC, and Pi USD. Exponent, meanwhile, is a Solana yield market where you can provide liquidity or speculate on rates with minimal and permanent loss. These projects just teamed up to launch a new USD Star pool, and they're throwing a pedal party until May 12th. This pool is offering a 4x pedals boost for all depositors. That's 4 times the pedals compared to the standard 3x boost. Perena is also teasing a product upgrade, and Season 1 reveals soon, so you should stack those pedals early now. That's all the alpha for today. Stack sats, farm smart, and don't get wrecked. Peace out.